Hey guys, Sarah Perkins here, your credit education specialist, as well as your debt resolution advocate with over 20 years in the credit and debt industry. And today I'm here to talk about your credit score, specifically your FICO credit score, the one that is still used in 90% of lending decisions. And just for a little inside tip, guys, it's not the one you see on Credit Karma. So stop looking at those scores. But I'm here to break it down what exactly makes up your FICO score, how to get the coveted 850 score, and how you can increase your score up to 50 points over the next 30 days. So hopefully you stick around for a lot of great information and inside tips to help you understand your credit score a little bit better. So how exactly is your credit score calculated? That's what I'm going to discuss here in this first part of this video. So a FICO score ranges anywhere from 300 points to 850 points, and it's made up of 5 different categories that they're looking at to come up with that credit score. So the largest category is at 35%, and that is your payment history. Guys, this is why it is so important to make sure that you are paying your bills on time. Anytime you have a late payment, collection, charge off, or bankruptcy account, you're basically telling your creditors that you have an issue making your on time payments on the loans or credit card balances that you have taken out. I have seen people's score drop over 100 points with just one late payment. So make sure you're set up on auto pay and checking those auto pay payments regularly. The second largest category is going to be your credit card balances and your utilization. What I mean by that is how your balances compare to the limits you have on your credit card. If you keep it under 30%, you will not get penalized in this category. And even better, if you can keep it under 10%, you will actually earn some extra points from FICO. So say you have a $10,000 limit card, ideally you want it under $3,000, and even better if you can get it under $1,000 balance. The third largest category is your average age of your credit accounts, which makes up 15% of your score. So what they're looking at here is how long your credit card accounts have been open on average. This is why we always suggest do not close those old accounts. They are helping to offset any new credit card accounts that you open. And why we also say be very cautious on opening too many new accounts, because then you're going to offset the old accounts that you have. And that gets me into the next category, which is the type of open accounts that you keep. That is 10% of your score. So FICO also likes to see a variety of different kind of credit. So they want to see some revolving credit cards. They want to see an installment loan like an auto or a student loan, and one mortgage ideally. So the magic recipe in here is maybe anywhere from 1 to 5 revolving credit cards, 1 installment loan, and 1 mortgage. And then the last category is our new credit or credit inquiries. So when applying for a new loan or a credit card, you take the chance of having a hard inquiry show up onto your credit report, and that can affect your score up to 5 points for every hard inquiry. Plus, if you then open that new line of credit that goes along with that inquiry, it's also going to affect the average age of the accounts that are open. So be very cautious when opening new credit. We suggest not opening a new credit card at least spaced every 6 months apart, if not longer. So what exactly is the secret formula for getting a perfect 850 score? Well, nobody knows the exact secret sauce. We've kind of have it broken down as close as we can get it. So if your credit score is up there and you're looking to get that perfect score, you may want to stay in tune for this. So we are able to break it down into 11 different categories. As I mentioned before, a credit score ranges anywhere from 300 to 850 points. So there's 550 points out there to be earned in the FICO score. So with each category, I'm going to break it down how many points that you can gain or lose based on how well you do in that category. So number 1, let's start with how many credit cards. So from there, you can earn anywhere from 0 to 30 points. And FICO says 2 to 4 is the best. Second is your oldest credit card. That's going to help you anywhere from 0 to 40 points. Obviously, older is better. And ideally, if your oldest card is over 20 years, you're going to get that 40 points. Next is your oldest loan, whether it be a mortgage or an installment loan. You can earn up to 30 points in this category. Again, older is better, and up to 20 plus years is what they're looking for to earn the maximum number of points in category 3. Number 4, inquiries in the past year. So that can earn you up to 20 points. So for every in-card inquiry, you can lose 1 to 5 points for a maximum of 20 points. So keep those inquiries to a minimum. Number 5, your newest account. So that is anywhere from 0 to 10 points. What they like to see for FICO is that your newest account be at least 6+ months old for the best possible score there. Number 6, number of accounts that have balances. They want anywhere from 0 to 4 is best to earn you another 10 points in that category. Next is your total balances excluding your mortgage. So this can earn you up to 15 points, and ideally, they want to see it under $1,000 when adding up all your credit card balances. Number 8, which is our biggest category by far, and if you saw the first part of this video, it makes total sense, but it's your payment history. So how well are you paying your bills on time? And that's going to help you earn up to 175 points. So they're looking at the number of derogatory accounts that you have, how old those derogatories are, and how severe were they? Was it a 30-day late, a 90-day late? Did it get to a point of charge off? So again, keeping that payment history impeccable is going to help you earn the 175 points in the payment history category. Number 9, past due accounts. So obviously they don't want to see any past due accounts. So bring those current or pay off those balances as soon as possible, because that category can earn you up to 40 points. Next, number 10, credit card utilization, second largest category I spoke about. That earns you up to a whopping 100 points, guys. So again, we want to see the limits between 1 and 10% of your balances, 1 to 10% of what the limit is. And last but certainly not least, and this goes along with your payment history, is any record of bankruptcies, collection accounts, repossessions, that can earn you or hurt you up to 80 points. And it impacts the score the older that those things are. But again, if you're looking for that 850, they're not going to want to see it at all. So last, I wanted to leave you guys with some tips on how exactly to increase your credit score up to 50 points over the next 30 days. So maybe 850 is a little bit out of reach for you, but you're just trying to see if you can get your score up. So I'm going to give you some great tips to help you get there as quickly as possible. My number 1 tip is to pay down your credit cards. Utilization is huge, and it's the quickest way you can affect your score by getting those credit card balances down. Under 10% is the best. And if you're limited on funds, what I like to tell my clients is start with your lowest balance first. So as you pay off each card, you're helping the utilization go down to 0 for that specific card, and FICO will look at each individual card as well as your overall utilization. So you're helping yourself with that one card, plus it's going to help decrease your overall utilization with all your cards. And a little inside tip for you guys: typically the balance that is reported on your statement is the balance that gets reported to the credit bureaus. So if you're trying to keep that utilization down, you want to make sure that you pay your balances early. Pay them before the statement even comes out. Go online and get those balances down before the statement comes out, because that is a balance that will calculate what your utilization is. Next is getting added or maybe even removed as an authorized user. So this is a trick where you have a family member or friend that can add you to a specific credit card. And we say good credit card because we want something with a good payment history. The older, the better, the lower the utilization, because essentially you are inheriting all of that credit history onto your credit report. So this is going to help you in a number of ways. If you are lacking credit, it's going to add good credit to your account. Maybe your credit is all too new. So if you get an older account on your credit report, that is great. Also, it can help with utilization. Maybe all your individual cards are maxed out, but the one that you're an authorized user on is not. Those are all the ways that being added as an authorized user can help you, but it can also hurt you if you're on a bad credit card, one that has missed payments or high utilization. So you got to understand, you got to treat it like it's your own credit card. So if you are an authorized user on a card that is bad, then you want to make sure you get yourself removed as quickly as possible. Well, the next one is opening an account. So I know I mentioned earlier about really limiting opening new credit, but sometimes you don't have anybody that can add you as an authorized user and you got to start somewhere. So we suggest opening a secured credit card if you don't have any open lines of credit. And that is essentially you have to put money down as a backup for if you do not pay on that credit card. So it does require some money up front. You don't have to have a large balance or limit. You can be something like $250. We also suggest opening what's called a credit builder loan if you're not having a car or a student loan or some type of installment payment on your account. If you're interested in some links on how to open those, I can send those to you. So just comment down below and I will get you those links. The nice thing about that credit builder loan is actually a savings account you pay into that reports like an installment loan on your account. So not only are you saving money that you can pull out after a year, it is also helping build your credit. And last but not least, I'm always available for a risk-free consultation where I can take a look at your specific credit report and point out things that I see that you can improve on based on your specific credit needs. So it's not a one size fits all. These kind of tips are very general and maybe they won't apply to you. So if you'd ever like me to take a look at your credit specifically, please reach out for your risk-free consultation today. All right, guys. Well, I hope you found that super helpful, and I plan on bringing you lots more tips and tricks on my channel. So stay tuned for more videos.